Shah Gilani's here, editor of the Capital Wave Forecast. I love when Shah comes in. Now, Shah notoriously was so great at making so many stock picks, but today, no stock picks, and there's a reason. When the market says there's a time to do nothing. Is that right? Is this that time?
That's my mantra. When there's nothing to do, do nothing. If you look at the markets, whether you're looking at the Dow or the S&P or the NASDAQ, we've been in a trading range through August. We've actually been in a trading range in terms of the Dow since the December lows, and we kind of popped up higher, had a nice move, but we've really been in about a 2,300 point move in terms of the Dow since then.
Why wouldn't
and
you
only
buy a
1,000
pullback? Why wouldn't you buy in a pullback?
Because we're in a sideways market, and there's no conviction on my part in terms of which way we're going to go. Obviously, we had the trade war with China. That's holding the markets back to some degree. Now this recession talk, which has become the narrative, that's holding investors back, and that may force players in the market to take profits.
I think what's interesting is the talk about what the Fed will or won't do. And suddenly everybody thinks they're on the Federal Open Market Committee. In addition to that, which is fine, I mean, you're entitled to an opinion, but there's been a lot of discussion about Bill Dudley's latest op-ed and whether or not the Fed should not enable the president. I mean, why are we talking about that? Aren't we trying to just do and have a great U.S. economy? I don't understand. What is this correlation or lack of, what's going on here?
I love talking about the Fed, and it's never from the positive side. I'm one of those folks kind of in the Rand Paul mode. I don't think the Fed should exist anymore. The reason for the Fed has long since been outdated. I think it's time to revoke the Fed. The economy is going to do what it's going to do. It's going to ebb and flow with the business cycle as it normally would do. Now that's been interrupted for years by the Federal Reserve manipulating rates lower. People think, the Fed came to the rescue of the United States economy and to the banks in 2008. The Fed actually caused the crisis by keeping interest rates too low, too long, and allowing the leverage to build up in the system in the mortgage market securities. So yes, it's like a fireman starting the fire and then coming to rescue everybody and then getting the credit for it.
Well, how do the other countries do it? I mean, I always think of the European Central Bank or the Bank of England. I mean, they're basically driving their markets, right? Bank of Japan. How do they drive their rates? If we don't have the Fed, who's going to drive our rates?
Well, the economy would normally, free markets would normally determine the price of credit, and that's not happening right now. So all the central banks they're almost working really in unison with the Fed. The Fed tends to lead.
Yeah.
Now, just a little bit other way around, we have some Asian markets where the central banks are lowering rates. The European Central Bank is lowering rates. Now the Fed is assumed that it's going to have to lower rates because the dollar is strengthening as these other countries are lowering their rates.
Right, but we'll see whether or not they do lower the rates and whether or not they're trying to,
but all
have
this,
some political motive
all
as well.
this makes me nervous about the market because it can go any which way, and there's no reason for me to jump in with anything long term.
I understand. So in our lifetime, do you think there's going to be no Fed?
Highly unlikely.
Highly unlikely. Okay, let's get into your defense mode. No stock picks. You're mostly cash here, sideways market, right?
I'm 90% in cash. I have some long positions in stuff like Amazon, Apple, Microsoft, stuff that I love. I will add to those. I'm out of Disney. I'm looking to buy. I think Disney's got some support at 130. If it breaks that, I'm going to go in and add to it if it goes lower.
Right.
I love Disney long term. I've made a lot of money in Disney, but I'm out right now.
So you had Apple, Amazon, and Microsoft.
Right now? Those are my core holdings right now. I had Ford for a while, did very well with that. Now that's come back down. I got stopped out of that. So I'm really just looking for positions to get back into some of the stuff that I really like. I love all the old, all of the tech stocks that took the market higher. I want to get back into all those. I think I'm going to get an opportunity at lower levels.
What kind of confidence and sentiment are you seeing and feeling and hearing, and how does that change? When does that change?
Well, as far as I'm concerned, the economy is doing great. The GDP is above trend, certainly at 2.1. We're a little down, obviously, from first quarter of 3.1, but we're still way above trend, doing very well. Unemployment is near 50-year lows. All the metrics are great. Wages are starting to percolate higher, so I think the economy is doing just fine, thank you. It's the narrative, the recession narrative that bothers me because that can turn investors negative. That can turn consumer confidence negative and investor sentiment negative. And that's the problem I see right now through the end of the summer.
Our last guest, Dan Suzuki, was saying, look, we have growth, but the jobs growth is slower. In fact, he was saying it's the slowest since the beginning of 2018. But the way you would say the narrative is sort of, so what? It's still growing, right?
We're doing great relative to pretty much every other Western economy. We're doing absolutely great. There's no reason to think that we're going to head into recession. People forget that the technical definition of a recession is 2 consecutive quarters of negative GDP growth. We're not anywhere near that.
Right, right. So, and next Friday we have the jobs report.
Yes.
So you're expecting more decent
the market
news,
is
or
moving,
some revisions maybe. They might not be so great.
That's some of the difficulty in getting into positions now. The market moves on tweets, it moves on news flow, and it moves on metrics. And that's a problem in terms of picking long-term positions, being comfortable holding them when the market is just moving up and down. The volatility has been extraordinary, and I think it's going to continue that way probably for the next quarter.
All right. Shah Gilani, editor of the Capital Wave Forecast. Nice to see you, Shah. Thanks for coming in.
Thank you.